government currencies, if you don't have a stable state and political system, it becomes really hard for people to give it credibility.
This is Kaiser Johnson, and this is the Miles Franklin Weekly Special for September 4th through September 11th, 2023, while supplies last. This week we feature 3 different specials: 1/10 Gold Eagles at $37.50 over melt, Kilo Silver Valcambi bars at $1.99 over spot per ounce, and your choice 1-ounce silver rounds at just $2.50 over spot. The Gold Eagle was first released in 1986 and has been one of the most popular gold bullion coins in the world, providing incredible recognizability and investor trust. The 1/10 Eagle is additionally sought after for its high degree of flexibility and liquidity. Like the 1-ounce Eagle, the 1/10 Eagle is 22-karat gold strengthened with copper. It's 1/10 of a troy ounce of gold, comes 50 to a tube, 5,000 to a box, and is available at just $37.50 over melt while supplies last. Finally, the Gold Eagle is IRA eligible. Next, from Valcambi, a Swiss mint known for producing some of the highest quality products in precious metals, we have Kilo Silver bars, which are 32.15 troy ounces of 3/9 fine silver, cast with individual serial numbers and a beautiful antique-style finish. They are only $1.99 over spot per ounce. They come 15 to a box and are IRA eligible. And for your choice silver rounds, you may choose between the iconic Silver Buffalo round made by various private mints across the US and the Silver Asahi round from Japan. Both 3/9 fine, both 20 to a tube. The Asahi rounds are also IRA eligible. And if you'd like to learn more about a precious metals IRA, call us, and we'll be happy to help you in that process. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And back with us today is our good friend Mario Innecco from the very popular Innecco64 YouTube channel. Mario, thank you so much for joining us today.
You're welcome, Elijah. Nice to be with you again and talking to you.
It's nice to be with you as well. Even though there's a little pond that separates us, it's great that we can connect in this way. I would like to discuss the recent happenings for local coin dealers in the U.S. Now, these are just anecdotal stories that people posted on YouTube of local coin dealers. It seems like their bank accounts are being closed, at least a few of them there. Your perspective on what's happening right now?
Yeah, I saw some of those videos pop up like the last few days, and one of them got a lot of views. A local coin dealer in Ohio, and he explained how he follows all the rules, AML or anti-money laundering rules. Everything's above board, and he hasn't changed anything. And I wondered, are they trying to stop not banks, but coin dealers from doing business? Because we saw what happened back in March when the big regional banks collapsed, and people probably rushed to get their money out of the bank, cash out of the bank to buy gold and silver. But then I remembered that I did a video in March about actually how much cash there is actually in the vaults in the banks in the U.S. And I found from Fed data called cash in the vault under the Fred website, which is the St. Louis Fed, that there's very little cash that banks keep on average. It's around $230 for each U.S. resident, and they've stopped publishing the numbers since September 2020. So what that means is that for every dollar you have in the bank, there's only half a cent of cash in the bank. And then I saw as well that I remember that the Fed moved their reserve requirement ratio to 0, which means banks don't need to keep any cash. And I think that could be the reason why. And some banks, of course, the number the Fed gave about the cash in the vaults is an average number. Some banks might keep even less than $230 on average, and some might keep more. So there's another video about a coin dealer in Illinois. Her bank shut her account. She was able to open her account with another bank. Maybe that bank keeps more cash. And the reason the coin dealers a lot of times need cash is that some people are actually sometimes sell their coins and they want cash. They don't want the cash to go into the bank. They want to keep the cash at home because they know how fragile the banks are. So that's what I mentioned in my video. I was trying to give my opinion on something that I'm not too familiar with the coin shops in the U.S. because I'm not there, but I think it could be related to the fact that the banks are running. We are towards the end of this fiat currency regime, so the banks are getting more and more stretched, so they're keeping less and less cash, and coin dealing, bullion dealing is a somewhat cash intensive business, and the powers that be don't like that either. So that's what I think is happening, and unfortunately, they can. A lot of these videos, they note that when they originally opened the account, in the small print, it says that they can close the account whenever, for no particular reason, unfortunately. So it's hard. And it's another reason why I think if you can get gold and silver now, you should continue to get it, because if you wait for too long, I think the door is shutting, and it's going to be very hard. It's like the analogy of the fire in the cinema. Eventually someone's going to shout fire and everyone's going to try to get out at the same time.
Yeah, it would seem like there must be some other reason that these accounts are being closed, because it seems like, there are probably many other businesses that are cash intensive as well, but we don't hear stories of, maybe banks are closing those accounts as well, but we don't hear similar stories like that. Your perspective, is there any other reason, do you think, that these accounts may be being closed?
Yeah, I think here in the UK, we've heard the story of Nigel Farage and others whose accounts have been closed. It could be a lot of it political as well, I would say. A lot of people in the precious metals space are more lean towards more to the right, conservative space. So it could be political as well. I'm just speculating. And even though a lot of the coin dealers follow the AML rules, it's never really... You can't tell, let's say, buy some coins from someone that comes off the street and they give you the documents or whatever you need to do, and you give them the cash. You never know what they're going to do with that cash. So I think, I think there's a lot of pressure from the regulators, and probably that's why as well. The banks just don't want to risk anything. Compliance is, here in the UK and in the city of London, there's probably more compliance officers now than there are actual bankers at the banks. When I started out, I don't even think there was a term, a compliance officer. So I think that's another reason.
And I think it illustrates the point as well, the need to have funds outside of the system, because what we see with Nigel Farage, these coin dealers, is that and as you mentioned, maybe in the fine print, you might want to look at your own bank account right when you're signing up. Can they just cancel for no reason at all? That's a way of just kind of completely shutting down someone, whether it's for political reasons or for other reasons. It's so important to have funds outside of the system.
That's right. And even if you have it outside the system, the funds, it still makes life difficult, because nowadays a lot of payments are made through the banking system, like here in the UK, a lot of our utility bills, all of them are made through what we call direct debits through the bank. But I guess it would be, I could eventually try to pay people, send it via the post with a check. But even checks are becoming rarer and rarer here in the UK.
Definitely. No, when it comes to, I guess, what is happening also in the banking system, I know we've seen multiple banks fail over the last few months. Do you have any update on that and the problems you see in the banking system? Because you mentioned how, the main narrative out there is that the assets in the banks are falling, right? So the bonds that they're holding, the value of it is falling because of rising interest rates. But you pointed out a very good point that the amount of dollars that they have on reserve is incredibly low compared to how much, that people think is actually in the bank.
Well, actually, it's the amount of actual cash. They might have bank deposits. Like one of the dealers in one of the videos said, "Oh, I have millions of dollars with the bank," but no, she has millions on deposit, demand deposit. The bank doesn't keep that in cash. But as for bank troubles, I think I saw Lynette Zhang from ITM Trading talking last week that a lot of the big Wall Street banks, they're issuing corporate bonds. And what does that mean? Well, that means that they're borrowing money in the bond market and rates are still really high. And if you thought rates are going to go down, you'd hold off, issuing bonds because they would get cheaper. So what that means is I think a lot of the deposits are coming out of the banks and they're having to refill those deposits with cash raised through the bond market. So that's not a good sign. I mean, of course, they're all Janet Yellen and the Fed. They're always going to say that the banking sector is in good shape and that they've done stress tests. But it will be interesting to see. I don't know if the latest is it the FDIC statistics for the second quarter or the latest quarter has come out. I remember looking at those back in February with John Titus from Best Evidence, and he was looking at the data from the third quarter of last year, and there was a huge amount of unrealized losses, like 700 billion. So it'd be interesting to see the latest data from the FDIC to see how those losses are playing out. And, the 10-year yield, bond yields are continuing to rise. We're only about 10 to 12 basis points away from the highs we saw last year in the 10-year. And that's despite the fact that the U.S. non-farm payroll data and jobs data last Friday weren't really showing a very strong economy.
It seems like obviously interest rates are rising. The Fed is raising interest rates because of the high inflation that we've been seeing. Inflation has taken a dip if you look at the official numbers, which probably are underreporting it. But do you see that inflation is continuing to be an issue and that interest rates are going to rise even further from here?
Yeah, I look at inflation as the creation of currency and credit. So we've had the inflation. Like if you look at M2, it's gone, after 2020, you look at the charts, it's gone crazy. It has come down, but I think it's probably going to stabilize, and that's still going to flow into the system. I've noticed that the price of crude oil is starting to go up, and that in of itself is not inflation, but it leads to higher prices, and I think the Fed will be worried about that. So yeah, I think like in the 70s when the inflation comes, it comes in waves. So the first wave was like 2020, late 2021 to 2022, beginning of 2023, and then it's dipped now. And like you said, they probably adjusted the CPI number to make it look less than it really is. They've done it in the past, and John Williams from Shadow Stats, he's looked back to the changes in 1980 and 1990. They've done it here in the UK. Back in May of last year, they basically adjusted the CPI all the way back to 1949. And that's like lowered the CPI here by almost 1%. So our CPI is at 6.8, but in reality, if you go back to pre-May 2022, it's more like 7.8. So yeah, I think also if you look at the technical picture for the 10-year yield, we had 40 years of declining yields, and now that's finished and it's breaking out. And there's still a lot of people out there who think that the bond bull market we had, or the bear market in yields for 40 years is never going to end. And I think personally, I think they're going to be wrong. And that's why I think there's trouble ahead still.
Now, I know you grew up in Brazil where there was inflation issues. So how is your own personal experience of inflation and, the ballooning debt issues and seeing the consequences of all that really impacted the way that you look at inflation nowadays?
Yeah, it really started kicking off like in the mid 70s when I was around 10 or 11. And you start noticing, when you were a kid, with the pocket money that I used to get to buy something at school, like during lunch. In the beginning, I used to get one Cruzeiro, which could buy me a Coke and something else. And then I needed 10, and then it just kept needing more and more. And then by 1980, we had a new currency, and the debt. I think Brazil borrowed a lot, of they recycled. I didn't know that at the time, but I learned afterwards. The big New York banks, they recycled a lot of the petrodollar earnings. They lent it to Brazil and other countries. And then when interest rates went up in the early 80s, it created a problem, and that's why the currencies went down the drain. But people with dollars, you're okay. And I was lucky. My dad's business was, he earned in dollars, so it was fine. But you can see the consequence of it. A lot of poverty. The middle class, gets hit hard. Wealth inequality, there is a lot of people that do well, but the majority don't. And no one quite understands why, why inflation happens. I'm sure some people did, but when you're young, a teenager or even younger, I didn't quite get it. What people used to say was that oil prices went up, and that's what caused the inflation. But I'm sure the Brazilian government was printing a lot of money to cover, and that snowballed and just kept going. That's usually what it is. And that made me want to know more about inflation. And and the same thing is happening. It happened also in the US and in Europe in the 70s, but it wasn't as bad as Brazil. And it's interesting that now Brazil, they've gotten ahead of inflation, along with like Mexico, ahead of it before the Fed and the European central banks. I got a question today. In one of the comments in my video, why has the Mexican peso gone up 20% against the dollar? And I said, well, it's because the Mexican central bank, they started raising rates in early 2021, way before the Fed. And right now, Mexican CPI is like 4.7, but their base rate is 11 and a quarter. So in Mexico, you're earning almost 7% in real terms in Mexican peso to save in Mexican peso. And that's why the peso's actually, which is strange, that the peso is doing better than the dollar, and the real as well in Brazil. They've done the same thing. It's like they've reversed, they reverse positions. It used to be the other way around.
I think that's an interesting point there. It shows that this kind of, inflation is not only something that small economies have, but it can happen in the US as well. And it's happening right now. Your perspective on where things go from here, because some people think, hyperinflation is not something that could happen in the US. It could only happen to small economies or third world nations like Zimbabwe or Venezuela. But your perspective on that, do you see the trajectory here heading towards something like hyperinflation in the US?
Yeah, it's very possible. I mean, Germany in the 1920s, it had come out of World War I and it was defeated, but it was one of the richest and most advanced nations in the world, and they had hyperinflation. I think one of the problems for the U.S. now is the interest rates, and I spoke about that today in my video, the fact that interest rates and yields are going up, and the debt, the national debt, also corporate debt, mortgage debt, they're all going up. And up until 2020, from the early 80s, it wasn't a problem because you could always refinance at a lower rate, and bond prices would go up and investors would pile in. But now it's the reverse. So it's possible that we could have hyperinflation, and usually it happens when no one expects it, and I think it's something that can happen overnight. It's a psychological thing. It's not based on cost push inflation, as they call it. It does start with normal price rises like we've seen, but I think it's more when people wake up and realize that the government and the central bank will never be able to stop the inflation. And that's why, and it's worrying because more and more people are learning what inflation really is. And you need people to know what inflation really is before you get the hyperinflation.
Now, in a recent video, you also talked about kind of the political turmoil that is happening right now. For example, what's happening with Trump, the first former president ever to get a mugshot, and how this, whatever you think of the politics, there's a lot of divisiveness happening right now and unprecedented things happening in the US. And that this actually sometimes comes before a currency crisis. Can you expand on that?
Yeah, I mean, I've read Fiat Money Inflation in France, and it's about the period during the French Revolution. Back then, they chopped Louis XVI's head, Marie Antoinette. There's, Robespierre, the Reign of Terror. It was total chaos politically. And then you had the collapse of the assignats in 1796. They destroyed and burned the printing press in Place Vendôme in Paris because of that. And then in Germany as well, in the post-World War I period, after Germany lost the war, the emperor, the Kaiser Wilhelm, he abdicated. Germany almost broke up, like Bavaria almost became like a independent state. You had political assassinations. It was a mess, and currencies like government currencies, if you don't have a stable state and political system, it becomes really hard for people to give it credibility. And that's why I mentioned what's going on in the U.S. right now, which is unprecedented, as you said. First former president to get a mugshot.
Now, when it comes to preparations, obviously we talked about investing in precious metals, really going back to the honest money, right? So holding something outside of the system, going back to honest money, something that can't be inflated away. Any other thoughts about preparing for a currency crisis?
Yeah, just having good friends and trying to avoid all the noise and all the distractions out there and focusing on what you do for yourself, your family, and sometimes friends and neighbors, and not to really, not to really let it scare you, because, even though it was chaotic in Brazil, people still lived. You can still, don't let it get you down, I would say, the main thing. And don't try to avoid the mainstream media, I would say.
Mario, really appreciate your time today. Can you share with our viewers where they can find you if they're interested in learning more?
Yeah, my YouTube channel is Innecco64, and I post there virtually every day. And I'm also on Twitter at Innecco1964. I think there are some impersonators there, but yeah, my handle is at Innecco1964. That's X now, not Twitter. And I also have some of my videos shortened, and they're on TikTok as well at Innecco64.
Fantastic. Mario, once again, thank you so much for your time, and God bless.
You're welcome. Same to you, Elijah. God bless.
Miles Franklin Precious Metals is one of America's oldest and most trusted bullion dealers. Miles Franklin is A+ rated and accredited by the Better Business Bureau, licensed and bonded, and has 0 complaints ever registered. Here at Liberty and Finance, we are licensed brokers with Miles Franklin. To order, simply call us, discuss your needs, and we can let you know our live inventory, prices, and availability, and lock in your order over the phone. Once your order is locked, the price is held for you regardless of market fluctuations, and the metals are reserved for you awaiting your settled payment. Within 1 business day of ordering, you will receive an email invoice detailing the order and payment instructions. Miles Franklin accepts payments by bank wire, ACH or electronic check, money order, check mailed priority mail, and cryptocurrency. The fastest forms of payment are bank wire and cryptocurrency. Upon settled payment, metals will ship out within 3 to 5 business days. You will receive tracking information via email. Domestic shipping charges are $15 for any order under 500 ounces of silver or 10 ounces of gold. For orders larger than that, domestic shipping is free. The package will be boxed, fully insured, and labeled discreetly, with no indication of the contents inside. For your privacy, the name Miles Franklin will not even be on the package. To talk to myself, Kaiser, my brother Elijah, or my father Dunnigan, call 1-888-81-LIBERTY. That's 1-888-815-4237.